Prime Minister Kishida now under a lot of public pressure given not only rates but a weak yen and rising prices. What is he saying?
Right. Well, what he said is, as you've just mentioned, that he thinks the Bank of Japan should continue on its current track for the time being. Obviously, the weakening yen is very concerning for the government as well as for the Bank of Japan and also the general public. But what he says is that you've got to take a more general view. Any rise in interest rates could really hurt these small and medium-sized enterprises in Japan, which form the bulk of employment in Japan. Most people work for one of these enterprises. So if you're damaging those, you're damaging the real body of Japan's economy. And that's a very dangerous thing to do, I think he's pointing out here.
So when he continues to back this policy, what potential backlash could we see? And what is the government doing on the fiscal side to try and alleviate some of those household pressures?
Right. Well, I think we are already seeing a backlash. We're seeing that support for his government and for the LDP is falling slightly. That's just ahead of an upper house election, which comes next month. And that's a key election for Kishida because if he manages to do well, he could remain in power for up to another 3 years. So he really needs to do well. But the thing is, although it's very unusual for monetary policy to become a kind of household issue like this, one issue is the inflation itself, which people are not used to in Japan. Of course, there's been deflation for so long that being faced with rising prices is pretty shocking. Also, obviously, the population is rather elderly, so many people are on fixed incomes, and the prices going up for everyday items is very tough for them. So I think it's an issue that he's got to watch really carefully, and he's promised more help for households on this.